Swiss yen, and I will point out when we talked about the UBS comments that made it into the FT yesterday about the Swiss being fingered as a currency manipulator. The Swiss has been the strongest currency almost since those comments, by the way. You can go look at it.
Jordan ought to tell Mnuchin, cut the crap, otherwise we're going to stop buying your stocks. Can you imagine?
That'll make Robinhood quiver.
I would love to hear how that conversation goes.
Yeah. That conversation, here would be my summation of it. There's more integrity from those who are on death row than it is from those two talking to each other.
Yeah, Penn, I think everything is, I think the sound is back to normal.
Here, didn't I just put in Swiss yen? What am I typing in? There it is. Yeah, Swiss yen's broken out big time. Especially on the quarterly.
Yeah, but oh yeah, that chart is unbelievable. If you look at the weekly, what a formation.
Yeah, that's I mean, there's room for that spread to go 10%.
Ira, from what I'm reading, it seems like Mitch McConnell wants to get the GOP internal wrangling done by tomorrow, and then he can go make sausage with Nancy Pelosi, right? But it seems like they've got to get it done sometime the first week of August, because then they break.
Yeah, and I think today's jobless claims will, as others have discussed, I mean, it's no secret, will help the situation because it puts pressure. Look, you don't have to be a friggin' genius to figure out that the economy, by the measures that everybody wants to look at, which is employment, turned down once there was a hiccup in COVID numbers, especially throughout Florida, California, Arizona, all pretty important economic centers. So no surprise that we're going to see a downturn, and that's what they're going to push on everybody about. And again, coming into the now we're in the final stretch really of the election cycle. Who's going to say no? Who's going to say no? There is no Tea Party to answer to. The Republicans have certainly thrown in the towel on fiscal responsibility long ago, especially once Trump came to the White House. You don't even hear a peep of it. So now you're going to enter onto it just as the economy is really trying to make a decision which way it's going to go. It would be foolhardy for them to stand up and block that. So, what moral ground are you going to stand on? You already surrendered that long ago. And let's go back to Mnuchin's comments. Somebody read me the headlines. I don't even have them up anymore. I didn't even understand them. What was it that he said? Wait, hold on. Maybe I can bring it up here.
No, I just saw his mouth moving, and then I turned away.
Ira, I don't know how you can listen to these guys.
You don't hear. I don't have. I used to have CNBC on in the background. I can't. They bring me
it's
to
painful.
nobody pushes at them to go, oh, what does that mean? So Mnuchin, so here's the headline that made it out. Mnuchin says U.S. to protect stability of dollar. Tell me what that means. That's the way the headline came across at, I don't know, Delta One. You know, there's so many different people who report it out. And that's what gets, you know, reported and responded to. What does that mean? Can anybody explain to me? To protect the stability of the dollar? You know, it's only, again, let's go back to it because.
Yeah, he was talking at like 8:30 this morning. So I'm looking for some news blips
Right.
or
So,
quotes.
so Mr. Mnuchin, again, the 200-month moving average on the euro is 126.34. So tell me, what does it mean to protect the stability of the dollar? God forbid somebody should have asked that question or some variation. Because if I go back even more, let's see, let's go back just to 2014, and the euro was at 139, 140. What does the stability of the dollar mean? I don't know. It's something it's a nice, they speak in platitudes, but I don't know what it means.
Ira, God forbid they ask the question, well, how does a cheaper dollar and inflation or inflationary effects affect all of the unemployed and underemployed people that live in places like the south side of Chicago, Bridgeport, Connecticut, Camden, New Jersey, Detroit, et cetera, et cetera? I'd love to hear that question.
Yeah, that's right. And Peter Bookvar has been banging the drum about that for so long, going, why would you be rooting for a weaker dollar, which creates the inflation, which will be a drag on people's spending power, which is right. But that's not what the focus of their attention is. Their focus of attention, and I don't know why people won't accept it, is to lighten the load of those who are carrying so much debt. And that's what inflation will do. I was reading Carmen Reinhardt. I mean, she wrote a piece. She wrote it for the IMF. I don't have it sitting in front of me. I'm so boring. I was reading it in bed last night. She wrote it with another woman, Sir Branica, and it's about financial repression and what its policy objective is. People have to understand we live in a debt-based society. That's the way the American economy is built. It's built on the credit card, which is always, and Lacey Hunt discusses ad nauseum. You're always bringing demand forward. When you bring demand forward, people are carrying debt in order to stay steady. So everybody's in debt. Well, again, inflation, money illusion, as Irving Fisher and others called it, especially the Austrian school, that will ease the burden of your debt. And that's what they're trying for. The whole concept of yield curve control, the whole thing of going back to the Treasury Fed agreement from 1946 to 1951 was all about financial repression and ease the repayment of debt, that was taken on by the war. We're in the same situation now. So they really want inflation because, again, the worst thing for a debt-based economy is deflation. Believe them when they tell you that. It's true. It's what they believe in their heart of hearts. And a weaker dollar, especially for the world financial system, is actually needed because the emerging market economies are suffering under the same thing, which is they're loaded up with dollar debt. And if the dollar goes higher, which I've tried to, I haven't tried, I've argued for many months now. That was the problem in March because the dollar spiked because of the dollar shortage and everybody was out searching for dollars in an effort to ensure that they can meet their payments that were due. So now we've eased off of that, and the weaker dollar would aid the emerging economies and keep them from suffering the pain of a strong dollar. You know, to speak otherwise is really disingenuous, because what else? What are you trying to succeed here? Then what is the Fed ultimately trying to do here? It's really the question that you can't walk away from. And Angelo, why they can't ask this question boggles my mind. Really, it boggles my mind. You sit in that seat on CNBC, um, uh, and you can't. You have to push these people to the wall and stop worrying about access to them. They have nowhere else to go anyway, so they want to come out and tell their story. Come on out and push at them, and ask them, what is it that you're ultimately trying to do? You know, they
You know,
right?
you saw the leading indicators came out this morning, right? And even, I mean, a big component of the LEI index is the stock market.
Yeah, right.
And even with the huge rally off the March 23rd lows, right? The LEI index didn't meet expectations.
Yeah.
You know, so everything else is falling apart.
You know, well, you know, so you need the good optics, and you know, you're getting them. But again, you know, the weaker dollar in the short term will help the stock market. But you know, it won't bring in foreign money, but certainly multinationals who earn a large proportion of their revenues overseas, you know, it does boost their earnings, and it has other repercussions, of course, too. But and this isn't, you know, we sit here and talk, and people, a weak dollar, again, it's all relative. It's all relative, and certainly as the dollars weaken, we see the next leg of the metal of the precious metals rally. You know, look to see how much gold has moved since the dollar itself has weakened and taken out some very critical levels that we could say in this room we've been monitoring for quite a while now. Uh, Interesting that we're not even really getting any corrections. Very small
Nope.
corrections.
Well, Ira, now, you know, look, the algos and the high frequency traders, you know, their models were built mostly off of 30-day momentum. Well, if you look back now over the past 30 days, they're picking that up in gold.
Yeah,
You know, so the models are jumping on it from a Momo perspective, right? And yesterday was the first time that I had seen any kind of headline on CNBC talking about gold.
Yeah, they absolutely, because see, their whole premise has been that gold is an inflation vehicle. Well, see now, so now they'll tie it into the tips, the huge demand for tips. But again, gold has been doing what it's been doing with no inflation, right? Either that or the central banks are lying. So you do have to ask that question. If the central banks are lying because they said, wow, we haven't hit our inflation target, we have a 2% inflation target. Japan, ECB, the Brits, the Aussies, the Kiwis, the Canadians, certainly the Fed, everybody's got a 2% inflation target, and yet gold's been going up. So where's the disconnect? Where's the disconnect? And again, if you're not asking that question, you're not much of a journalist. Oh, you know what you are? You're a face. Go ahead and put another face. Blonde hair, blue eyes. Okay, bring in a brunette every once in a while, but you're just a face. What you're playing to,
But Ira, you know what? I mean, gold does work in both scenarios. It does work in both deflation and inflation. But I understand your point completely. They don't get that it definitely works in deflation.
But the deflation has got you the first leg of this rally here, about a 60% rally. Yeah.
Oh yeah,
Inflation
absolutely.
Period of the day, but if you've looked to gold to be by the time you get to the inflation, I would Well, it all depends, of course, how the Fed responds. And again, and I keep raising this point. I played golf with a guy yesterday who's pretty astute financially, and he was asking me about the bond market. I said, it's a dead market. And he says, yeah, I know, but guys like me, he's in his 70s. I said, I know. And he says, well, I buy, I told him about, hold on. Oh, I'm going to put this on mute for a minute. I'm sorry. You think I learned how to use this one?
What's this, all Amazon? I mean, what's driving the XRT? All right.
Angela, what was that? I know we were in the middle of.
We were just talking about gold working in deflation and inflation. But I mean, the gold trade basically began at the end of the fourth quarter of 18. I put on my first gold trade in January. I'm sorry. Yeah, I put on my first gold trade January of 19 last year. And that was all a result of, growth decelerating and real yields compressing. And back then we were still in the strong dollar regime. So that was that was still solidly deflationary, and gold clearly worked throughout. Remember the chart a couple months ago? Remember the chart that I put up that showed treasuries, gold, utilities versus the S&P and the Russell?
Yes.
That's the period that chart was demonstrating.
Yeah.
So now we're getting down dollar, and gold is really taken off.
Yeah,
right. But real yields are more negative today than they were back then.
Right. And that's what people are writing, even John Authers and other people now are writing to that. But it's always about real yields. Nominal yields are meaningless except for headlines. It's for investors, real yields are the key. Listen, it's the negative real yields that I believe has really driven the equity market rally. Because again, as I said to this astute individual yesterday, I said, left in a dilemma. Where are you going? What do you do? He says, no, I know. He says, I'm 76 years old. where do I go with my money? And he says, I don't want all this risk. He says, so I look for high quality companies with paid dividends that are higher, certainly higher than the treasuries. And, and I'm stuck buying more equities than I ever want to buy. But that's
Yeah.
exactly what they want. That's definitely policy response that they want. That's
Yeah. So Ira, here, just to play a little game. So if I go back 1 year to roughly July 30th of last year, the 10-year was at 2%, right? So what inflation rate do we want to use for that period last year? 2%?
right. You tell me.
Okay. All right. So let's just use 2%. All right.
Mhm.
So that meant that real yields were 0. Okay. Now today, the 10-year is at 58 basis points. So if inflation is, let's just be kind and say, okay, 2%, right? That means real yields have dropped from 0 to negative 1.42.
Okay.
So we're now negative 142 basis points versus 0 this time last year,
Okay.
right? And what's gold doing? Freaking taking off.
Yeah. No,
It's directly correlated.
it is. It's very highly correlated, and again, that's why, when you're patient and you trade this patiently, you wind up in really good circumstances because the market, based on some headline crafted to create volatility, will provide you with opportunities to enter the market. Now, it was a tough time in March and April with the metals because there was the onset of deflation, and the onset of deflation generated a response from the Fed and other central banks around the world that all the gloves came off. You had a massive fiscal stimulus all over the world. You had the central banks open up the spigots, all in the effort to prevent the onset. And I can't stress that enough, to prevent the onset of deflation, right? That's all they could talk about. And because the fear was deflation, all the debtors around the world were running and buying dollars. So, I talked about it in the blog regularly to get people aware that, and I'm using BIS numbers and IIF, the International Institute of Finance numbers, about how much private debt, corporate debt there was in the emerging market world, that it had grown to 11, 12 trillion. And that's what was helping push the dollar. But you know what? And Judd was really good on top of this because this room started looking at the support levels even as the dollar was rallying. And then you started to look and go, is this all it's got? Is this all it's capable of? And it was a very important comment. We saw some ups and downs, which was rightfully so. The Fed got really, really aggressive. People started getting a little nervous. But the fear of deflation, because, you go back and Google how many times we read about deflation. Now we're not reading about it. But as the job market was absolutely under great stress, as layoffs were coming all over the place, the fear of deflation set in. You had that one move where gold, of course, had a week or 2 days where it was down $150 in anticipation, but that was the real opportunity. Because again, what prompted it? It was the response. And I still say the major missing element in this is, of course, when's the end? Because the Japanese have done what the Japanese are going to do, and they're equity buyers. Just the Europeans, of course, the euro yen is going up because now the euro is gaining some genuine respect, because there are people who go, well, if the existential crisis is over, at least in the short to medium term for the euro, as I said, the probability of the euro failing, I think, in the last 8 weeks has gone from 40% down to 10%. So it's prompting a move into euro assets. And you're seeing it, of course, in the European bond markets. Look at, my favorite trade, look at the butterfly today. The Italian is up, the Bund is getting whacked, and the French is kind of holding. But if you're involved in the butterfly, you've had a very good day, because it's just people synthetically creating a euro bond anyway, which is, I believe, the insurance companies and some intelligent sovereign wealth funds have been doing that, because you can get a higher yield than you can on the US 10, even synthetically, buying X amount of bonds, almost mirroring the ECB. But now you don't even have to buy the bonds, because now you're just racing with people who need it for collateral issues. But the world is definitely taking on a different look here. And I want to know what Mnuchin meant by his comments. God forbid they should ask a question and maybe try to get a real answer.
Do you think he even really knows?
No, I don't even think he has an idea, but it's a nice line. Protect the stability. I don't know what I mean. And then, well, if you say that, well, the dollar, you can go Google when Trump came out back in May and said, see how strong the dollar is? It's a good thing. And I laughed about it. It couldn't have been a more ill-timed comment, because in the face of a financial crisis, you definitely want a weaker dollar. And here's a guy who's been talking nothing but nothing about weakening the dollar for 3 years. And now you come out when you need a weak dollar. It had to come from that idiot Navarro.
What would be interesting, we play some what if here, like for the election, right?
Yeah.
Imagine Elizabeth Warren as Treasury Secretary. Would she, you know how she hates Wall Street. Do you think she would play the same kind of games to prop up financial assets the way this group has?
Oh, no. Although she's very, believe me, I've been following Elizabeth Warren for many years now. When she used to be on CNBC regularly talking about problems on Wall Street, she's very knowledgeable. She's not a fool. And there are certain places you don't want to go, because the damage you will do will unleash some forces that you don't want to unleash. But she will explain to them that, Molly coddling you and you overriding any sense of real regulation is over. I honestly believe that Dodd-Frank, which to me is a pathetic effort to create regulation because it was lobbied so much, all you do is have to go back and reinstate the original Glass-Steagall. And you would get, because it worked for all those years. And again, if you're a bank and you want to go down the path of leveraged risk taking, you have to opt out of the FDIC pool and actually pay a real market rate for money. Goldman Sachs with Marcus is a joke and a half. It's a joke.
That is for sure.
It's a way for them to get into the, as soon as they went to a bank holding company during the time of great stress back in 08 and 09, they should not, with their risk profile, they should not be allowed to take deposits that are federally insured. That's all. That's a market response. I'm not making a regulatory, that's a market response. You want to take on great risk, pay a risk-based interest rate for capital. Not an FDIC. And again, understand that Glass-Steagall, which was really a good piece at reining in bank speculation that did so much harm to the economy in the late 20s and really was a great um, did so much harm and did much to rein it in. Again, the same day Glass-Steagall was passed, FDIC insurance was improved. Do you think that's by accident in June of 1933?
Oh, of course not.
No, it was absolutely by design. So when they repealed Glass-Steagall, I was in real time arguing, fine, then change the rules on FDIC insurance. Because if you are now in that situation where you are able to get deposits from the public at large while you're taking on all this risk and putting us at risk, as I said, you have now socialized the risk and privatized the reward. Yeah, end the story. And it is that simple. It is that simple.
I mean, I never believed that Goldman should have taken on a banking charter to begin with. You know, to me, it just completely takes away from what they've historically been good at.
Yeah, no wonder these guys don't vote for me to get on the CME board. Sorry.
Well, Penn, you know, I mean, the way I understand it, correct me if I'm wrong, but that was Hank Paulson roping everybody in because they didn't want Citi going under, they didn't want AIG going under. Merrill Lynch.
I think they were
Merrill Lynch. That was a shot. Merrill Lynch was a shotgun wedding with Bank of America. You know, there would have been a lot more damage. So when they did TARP, you know, the $750 billion package, they wanted everybody in together so that no weak links in the chain could be easily identified.
Yeah, no, I agree. I think it was a psychological thing, but, you know, I was sort of surprised that Goldman kept their bank charter, you know, being a former Goldman gal myself. And, you know, all these guys like, you know, Mnuchin was a kid when I was at Goldman. I mean, I was a kid, but not like him. But, you know, because I worked for Richard Perry. Richard Perry co-ran the largest risk bar desk at Goldman, and I left to start his hedge fund with him. And I don't know. I mean, I think that, quite frankly, they should have let some of these banks sort of go. They created the mess. I mean, actually, Clinton he actually created the mess, in my opinion. He wanted everybody to own a home. Everybody should own a home, whatever. Then you had Paulson, I don't know, whatever. He said, what was it? They needed 40 times leverage. Who went to them and asked for 40 times leverage? And that's what got us into this whole, you know, too much easy money. And right now, I mean, I don't know. I have zero debt. I'm so glad to be debt free. Not, you know, I own my homes, da 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 da. I think it's a terrifying time right now. And I don't know what this big experiment is going to yield. And we never really, you know, from the thin crisis, we've never really gotten out of that. We're still in the same, you know, easy money, cheap money, and same old bullshit.
Well, until, in my opinion, until the day comes, and it could be after long after I'm dead, who the hell knows, that one day it's going to blow up. Whether it blows up in hyperinflation or deflation or, you know, whatever, we have entered a new paradigm now where the level of volatility, right, is going to, just generally speaking, be higher than what it has been up until now. So, you know, stocks, you know, macro assets, the volatility levels, the swings are just going to be, in my view, much more violent and more frequent.
I mean, personally, I like volatility because I like to trade. But on the other hand, I have no idea. This is such a big mess. And I'm, you know, I mean, quite frankly, we're in a civil war. Nobody wants to call it that, but hello, when you have the government, federal government, going into states acting like a junta, And, I was always a moderate Republican, fiscally conservative. This is a little bit nuts. And I don't think that, Americans can be a little bit amateurish, I think, when it comes to, and by the way, not meaning that in a negative sense, although it is negative, but for people who have lived outside of the United States, I mean, and looking at this country and seeing what's going on, I mean, it's a mess. I mean, it's financially a mess. I mean, I don't know how you can keep on just doing what you're doing, adding more debt. And Mnuchin said this morning, oh, well, we can worry about it later. Okay, well, there's always later, but later never seems to come. So I guess because we can print money, you can erase all that stuff if you want. We said it, but I don't get it, except that I see the bigger picture of there's a civil war going on and nobody wants to really recognize it. And most of the spooky people that I knew before, when Trump was running, that was all their concern. And my father worked for 2 presidents. He worked for Nixon and he worked for Carter. He's, he doesn't care. He's a Russian expert. But I think we're in a mess, and I think Donald Trump is a mess, and the pendulum's going to swing back the other way, and it's going to be what it is, at the end of the day. But I don't think Biden's going to create a mess, because I know Pete had an issue with my thinking about it, and he's probably right, on some level. But I think that Biden and Obama, or Obama, got us out of the last mess, and it took a long time. I mean, people forget what sort of was a depression. I mean, I had no clients paying me. I mean, that was a scary time. And we're back in a very scary time now because we don't really have a leader. We don't have a plan. We can't contain this pandemic. There isn't sort of a federal mandate about anything. And it's all politics, about wearing a mask for governors. I mean,
well, we need to acknowledge, Penn, that in capitalism, you have swings. You have swings from extremes back to the bottom and eventually back to the top again. That's just the way the cycle works. But unfortunately, they don't want to let that cycle work. So they intervene with all of these machinations that have created the environment that we're in now. The biggest mistake was not letting the recessionary forest fire burn all of the dead wood out back in 2008 so that we could have good organic growth in the economic forest.
That's something I totally agree with you, Angela, because this is a very highly innovative country. People they're doers. I think this political thing's totally out of hand, but I agree with you. And I think it's okay to clean house sometimes, get a new clean slate. There's nothing wrong with that. And Michael, as far as Biden's problem is his health, well, he's not that much older than Donald Trump. And he does have a terrible stutter. I think that's why people think he isn't put together. But that's really an issue. And I didn't even know he had a stutter. And then I heard him at one of these, whatever he was doing, one of his town halls. So, and I do think the whole reason why you have the vice president and the Speaker of the House then becomes, so there is there's a plan in place for succession. I don't really have an issue with that, but I think there's a lot of stuff going on right now that I find incredibly scary and very amorphous. And Donald Trump is not somebody, if you live in New York City, that guy was a clown. Everybody knows he's a clown. He couldn't, I wouldn't let him babysit my goldfish. He's just an irresponsible guy, and he's just stoking all kinds of flames. And I don't know, and I don't understand quite. I have a lot of CEO friends and neighbors and whatever and family.
Look, I don't want this to turn into anything political, and let's just say that this problem began long before Trump, okay? And yeah. I don't think you could put freaking Mickey Mouse in the White House, and these problems would still be here.
Well, but you need leadership. There's no leadership, and that's basically, you got to have a plan. and there is no plan and there's no leadership, and that's a big
Well, a plan for what exactly?
well, a plan for anything. Well, okay, I don't want to devolve into this either, but I mean, come on.
It's not political, guys. It's just, hey, you know what? You take the pulse of what's going on right
No,
now.
this is deep-rooted economic stuff that transcends a president.
Oh,
Well, I think the
100%
pandemic-
Any president for that matter. At this point.
You know something, Angela, I kind of feel like it's like when I voted for Obama because, okay, I've had enough of all the GOP. And by the way, I was a moderate Republican. And then, you know, I did vote for Mitt Romney the second go around. But, you know, we keep on making the same mistakes. And the other thing is, just like you said, even currently, having the Fed say they're going to buy zombie companies, why? Let them go out.
Well, yeah. Well, zombie companies are just one of many unintended consequences to all of the manipulation.
I mean, because they don't want the unemployment number to go down. I mean, there will be other companies, other sectors that will be born, just like you said. You know, you need that forest fire, and then you're going to have new growth come up. So,
you know, and does Trump playing politics right now and not wanting the unemployment rate to go even higher than what it really is? Hell yeah. You know, are those games being played? Absolutely. All right. But it doesn't matter who's in the White House. They'd be attempting to do the same thing, you know? So, you know, I try to get to the point where I understand what's going on, and I'm just trying to watch the markets and trade it as effectively as I can, right?
Yeah.
To make money for my clients and for me.
Yeah, Charlie, I agree with you. All right, so I'm going to stop recording this.
Yes, that's a good idea. But let me explain something that the conversation dodges around. You can talk all you want about liquidation, okay? Because the market needs to cleanse itself. You get Schumpeter's creative destruction. But back in 07, 08, I argued with Santelli regularly about it. You couldn't be a liquidationist and allow for it because unemployment, and we just saw it, by the way, we just saw a hint of it, just to 25%. Well, in 1932 and 33, it was difficult enough in 31 to have unemployment that high. You cannot go to a sustained period of unemployment that high in this country. The political fabric of the United States at this point in time could not take it whatsoever. What's the break number? I don't know. But that unemployment level is very important. And it was really tough enough back then. And you were in a far different realm. You cannot afford to have mass liquidation of assets, okay? The Kennedy family buying the merchandise mart for $6 million. You are not going to go into that. Now, a lot of people would like that, especially those of us who are sitting on cash because we've been getting punished for so long. But politically, you could not absorb it. You could not absorb it. And you have to factor that into your thinking. And to who you're going to blame, there's enough blame to go around, which is why, I'm like Will Rogers. I don't belong to any political party. I'm a Democrat. And I want to hear from Penn more about her father as a Russian expert, because we can talk about Russia. I want to hear about that. Hell with the rest of the stuff.
You know what, Ira? We'll do it offline at some point. Yeah, no. I mean, fun. You know, my dad's quite old at this point, but he really, and he was a refugee. So I'm the daughter of, I'm a descendant of William Penn on one side and a first generation of a European on the other side.
Yep.
So, I feel blessed by both situations.
Well,
my dad, the American dream.
Now, you see, the only thing, so when he looks at the world, I'm sure he still looks at the world. And being that I've been a Russian and Soviet prolific reader of history for a longer than I care to admit. But yeah, like his views on the sanctions, where I view these things as absolutely ridiculous, and that they, one of the things that I blame the Obama administration on is, of course, allowing Russia back into the Mideast when they were totally locked out. But I think that their policies were really inept. And I'm like you. I voted for Obama in '08 because it was with pride. I had walked enough and been enough involved in enough civil rights work, movement, and it's not like at that time McCain was worthy of being president. The best comment I ever heard was the 2008 election was about two people, one who should have been president 8 years earlier, and one who should be president probably 8 years from now. And I think that was probably the best summation in real time, because McCain was a terrible candidate. And I like John McCain as a person, because anybody who could live in solitary for 5 years gets my utmost respect. But his time had certainly had gone. So it was an honor to vote for Obama. And I think in my mind, it was a way for the country to finally move ahead on many different levels. Of course, that proved wrong, but he didn't deserve it because, to me, he was not a leader. He walked away from certain things, nothing more so than when he walked away from the Bowles-Simpson Commission on Tax Reform, which I thought I read that thing twice and more, and they were on the right track, but the Democrats in Congress wanted no part of it.
I think Obama was a lawyer, and so he was always, weighing things. And so therefore he got a bit stuck, unfortunately. And that's why, I was happy to vote for him. I'm happy to have the first sort of, cafe au lait American president. But so that's historic. And I do think he had the makings, at that time people were hungry for leadership anyway.
Right.
But
Right.
I did vote for Romney's second go around because I thought, hey, we need to fix stuff and we need to stop equivocating and actually move forward. So,
No, that's right. And I don't think I voted for, I think I voted for, I may have voted green just as because it was just, he was not, Mitt Romney's, I think, is a very good person, but I think was another candidate who was.
if you're voting for, I don't know, it depends. Again, I think everybody here is, people vote for the economy. I get it. But if you don't solve the pandemic or contain it, you're not going to have the economy you would like to have and deserve to have at the end of the day.
No, listen, this country has some very severe issues, and the idea of just keep, doing what they're doing. And I blame a lot of it on the Fed. Really, I hold, especially Bernanke and Yellen. Yellen, I think, wanted to do the right things. It was getting on but they're academics first, and they seem to fear markets but not respect them, and that's a very important to me differential, and it has to be answered to, because I think Bernanke's big failure was when he didn't proceed with quantitative tightening back in, when he first announced it, and they threw the taper tantrum, and he went running for cover. And I think it was, stop being afraid. You have to allow markets to correct and be punished, because it's the only way that risk becomes more thoughtful. When money is so easy, there's no thought to risk. Go read the popular McKay's book, the Delusion and Madness of Crowds. All part and parcel of when liquidity flows so easy that money means nothing, or as Minsky would talk about,
Hey, guys, take a look. Ira, I just sent you a thing that Zero Hedge just posted.
Oh,
Yeah, a bunch of bullshit. But
you know how that pains me. But
yeah, I know. Take a look. I put the thing in here on the in the chat too. Gold spread turns negative. What gold spread?
Yeah, hold on. Let me get there. You know how he pains me. Oh, does he pain?
Oh, these guys.
Mr. Sensational. When I read Zero Hedge, it's to me it's like reading. It's like standing at the checkout counter reading the National Enquirer. There's some truth to it, but the first thing is to titillate and sensationalize. So.
Yeah, well, the important thing I just got was the announcement that tomorrow is National Tequila Day.
Oh, really?
Yeah.
Yeah. I'll have to tell my wife because we'll put on what's his name song. Tequila makes her clothes fall off. But we'll see. My favorite YouTube song. Why am I not getting back there? Because I'm stupid.
Yeah. Well, Jeff, I got my bottle of Tears of Lorona.
Isn't that Zero Hedge article just talking about the basis?
Yeah, I think so. Gold, physical, less futures.
Oh,
Bosco?
so he's going to be working on the CME again. That's what that's about. Because now with the basis trade, well, we're coming up to an expiration period, right? First notice. What's the date?
29th they go off.
Yeah. So that's what you're going to have. So okay, all right, I got it now. Hold on 1 second, Joe. Let me take a look at it. I've been sitting here. Oh, shit. All right, I will come back. I'm going to mute myself. I have to deal with somebody. So
Okay. Yeah. All right, guys. So I am yeah, I just keep refreshing my system because, ever since I added those other exchanges and all these other point and figures, my system just is not in love with the data pull.
There's that damn Amazon again. God damn it. I wish they'd just go fill that goddamn gap already. Stop farting around.
Yeah, I mean, the indices are impossible because it's all spreading going back and forth. They're just buying the small and mid caps against everything. They've been doing it all morning. So the names themselves are just, they're just kind of trading off their own technicals. Bungie, ADM, some of those other names. And you got another $20 or $30 to go here in the gold. They'll probably go tag it either later today or tomorrow. Should be the all-time high.